I'm Richard Aston. I'm the lead portfolio manager for CCJI, which is an investment trust launched in December 2015 to focus on generating total return from investment in Japanese equities. We think Japan's a great place to invest. It has been for the last 10 years, but we think the opportunities are still very, very significant. There's an acceleration of the reform programs initially started by former Prime Minister Abe. As a consequence of the reforms, we're seeing much clearer strategies from individual companies for growth and also capital efficiency, and very, very clear policies on shareholder return, particularly through progressive dividends. So we think Japan's an exciting place to invest at the moment. We see a lot of very exciting growth opportunities. Firstly, as the economy shifts from deflation to inflation, but also the fallout of the geopolitical situation. We look to invest in growth companies that have a strong competitive advantage in their chosen field. Companies are able to generate cash flow that they can reinvest to capture the best of those growth opportunities going forward, but also can complement that growth with a return to us as shareholders through progressive dividends and share buybacks. The investment process is focused on generating total shareholder return, a combination of capital appreciation of the shares and also progressive and compounding growth of the dividend. We look to invest in well-established growth businesses that have a strong emphasis on shareholder return. The process is very much bottom-up driven. We spend a lot of time researching companies, their industries, their competitive position, and also spend a significant amount of time in conversation with management. We pay attention to valuations, particularly valuations compared to international peers, but also the valuations relative to the local competition. We're very clear on the characteristics of companies that we appreciate and avoid companies that do not demonstrate that. This tends to be companies whose balance sheets are weak or whose earnings are very, very volatile. The fund seeks to generate a total return, the combination of capital appreciation and compounding dividend. We aim to offer a dividend that exceeds the local market yield and also a growth rate that is at a premium to local market growth. We have 7 consecutive years of dividend growth, which reflects the underlying performance of the holdings, and we remain very optimistic about the future growth.